Alphabet Inc., otherwise known as Google, have just released their fourth quarter earnings for 2022. Now, this is the fourth quarter and the full fiscal year, and we are going to be going through these numbers right now. Then we're going to be taking it to my stock valuation spreadsheet, looking at discounted free cash flow models and the Buffett-Graham intrinsic value model to see if this stock is a buy or a sell. Now, if we just quickly look to how the market is reacting, they were up 7% on the day, but are now down 4% after hours to $104 a share and 43 cents. If we look at the stock over the last year, it has been a bad year for Google, down from highs of around about 150, down 23% on the year. If we take this a bit further back, they had a big rebound when they're at the lowest back at $88 a share, but this stock has got a way to climb to beat its all-time highs. So let's just get straight into the numbers. Well, actually, what did the CEO of Google said? He said, our long-term investment in deep computer science will make us extremely well positioned as AI reaches an inflection point. He's excited by the AI-driven leaps we're about to unveil in the search and beyond. There's also great momentum on cloud, YouTube subscriptions, also subscribe if you're not already, and our Pixel devices. We're also an important journey to re-engineer our cost structure in a durable way to build a financially stable, vibrant, and growing business across Alphabet. Very similar messages to what I saw in the Facebook summary the other day by Zuckerberg. A lot of efficient talk right now. So let's scroll down and go through the numbers. So firstly, we have the revenues of Google. We have the full year ended December 31st on the right, and then the quarter on the left. But we'll be talking mostly about the full year, and you can see revenue is up 257 billion to 282. So that is a big increase in revenue. Good to see. Also quarter up just shy of $1 billion as well. Now, where the negatives are on this is we need to look at the profit. What is profit? Well, it's revenue minus all the cost and expensive. Cost of revenues are up about 16 billion, R&D up about 8, sales and marketing also up, and general and admin is up as well. If we look at this, well, what does this give us? Well, it is about 208 billion in expenses compared to 179. So overall, that gives us a net income of 60 billion, which is down from 76 billion in the prior year. If we also look at the quarters, 13.6 compared to 20. So that is 60 billion for Google on the year. Now, if we do look at Yahoo Finance here and compare to some of their other years, see stock is down about 4%. People are not liking what they're seeing too much. If we go to the profit, trailing 12 months was 67 billion, but it is down. So 60 billion, down from where it was in 21, but it's still higher considerably than where we were in 2020 and 2019. So overall, I would say that is still a good thing, but we want to see profit rising. 21, we are not beating that. Next, we want to see if Google are buying back their shares or issuing new ones, and they are issuing, they're not issuing new shares, they're buying them back, 13.3 to just shy of 13 billion. So that is good. They're buying back shares, they're rewarding shareholders, and overall, it has been a good year to buy it because the stock has been decreasing, so they've consistently bought throughout the year, and they bought back definitely when it was at its higher price at 150. So that has actually turned out to be quite good for them because the stock has dropped. Now, before we go into the free cash flow, we can just see some of the areas on Google in terms of their revenue for different areas. So this is Google Search and Other. This is the main driver on the Google side, 42 billion. YouTube ads down, actually, 8.6 to 7.9. Google Network is up. Google advertising in general, the entire advertising is down 61 to 59 billion. Cloud is up slightly, Google services are up, and other bets, very small amounts here. So it is up in terms of revenues, as we saw before, and the costs. Now, if we look at the cost, you can see Google services down. Overall, looking quite good, but yes, as we said, it is not as good profitable year as it was last year. So now we want to look at the free cash flow. So we need to go to the, I always lose it. Where's the cash flow statement? It is around about here. And we can see that the free cash flow is cash from operating activities minus capital expenditures. Operating activities are about the same, 91.6 to 91.5, but capex is up 24.6 to 31. So that is about a free cash flow of around about 60 billion. And if we look at the summary sheet here, which I've got, these are what Google's been doing. PE ratio less than the market, revenue is up compared to the last 5 years, profit is up, they're buying back their shares, and free cash flow is up at around 60 billion. Free cash flow ratio 23. So I think overall discounted free cash flow will probably like the stock. If we just compare the cash flow numbers to other years, I'm going to guess we had big cash flow in 21. Yes, we did. To be fair, not that much of a drop-off. If you compare it to the profits of last year, I think this is a pretty good one, but still massively up from where we were in 2020 and 2019. So let's have a look at what the discounted free cash flow model says. And interestingly enough, it says it is not a buy. It gives it a calculated stock price of $85 a share. Now, if we just have a little look here, why is the reasons for that? Well, I think the main thing is the slowing revenues that analysts are expecting. This is giving about 11% average. Now, this is with a big 2020. Free cash flow to net income. Obviously, the free cash flow has decreased. If that was an increasing number back to where it previously was, I think we would probably see this as a buy. But this is within 20 in next year, having a free cash flow of 64 and eventually beating the 21 number in 2024. So if we have a look at the Buffett-Graham intrinsic value model, this is the adjusted one, which takes earnings per share, expected growth rate, and AAA bond yield into account. So let's have a look at what analysts are expecting Google to do over the next 5 years. And they are expecting around about 10.2% of growth. So we'll add that into the sheet. And interestingly enough, once again, the, that is not the right price. Google is this much. I was going to say $180 a share. That didn't seem right. It's $108 a share currently, and actually the Benjamin Graham formula says this stock has a fair value of $125 a share. Now, the Graham price is kind of a margin of safety, which is bringing it to about 94. So if we look right now, it's at 105. It is a buy according to this model. Discounted free cash flow, not so much, but they're definitely, if it drops any lower, it's in the ballpark of where these things are a buy for both models. So very interesting to see. Now let's just see if the market has. Nope, it's still reacting pretty the same, about 3% on the downside. Right, guys, thank you very much for watching. Hopefully you've caught my video on Amazon as well, and depending on if Apple have released their earnings, we will be going through that as well in the next video. Let's just see a little sneak peek right now. Ooh, they're down 4%. Well, I'll better have a look and see if this is because of the earnings. So thank you very much. Subscribe if you're not already, and I'll catch you guys next time.